The finance minister's budget echoed President Jacob Zuma's recent pledges to bring radical economic transformation to South Africa. Earlier, Francis Hurd spoke to KPMG tax expert DeborahTickle on the creation of a new top personal income tax bracket that will see people with taxable incomes above 1.5 million rand or 125,000 rand a month and above paying 45% tax.
Some people were saying 1%, some people were saying 5%. If you look at the Davies Tax Committee macroeconomic report, the suggestion was that we would need up to 6% to equal a 3% VAT increase. So I guess the 5% on an excess of 1.5 million rands of earnings kind of evens it out. And it is in line with a number of other countries in the world. We see the UK, Spain, Luxembourg. There are a number of other countries, although many of them have lower corporate tax rates.
Okay, so we're not out there, basically.
Well, the global average is 33, just over 33%.
Right.
That's
so we're
the marginal
significantly
rate.
higher.
We are higher than that. But there are other countries. So I guess one has to look at the package. And the point is that our corporate tax rate is still quite high. And now with the dividends tax rate, it's clearly a political move to say we're taxing those 100,000 people who are supposedly wealthy. And
so explain more. If we're looking at the wealthier in this country, what are the taxes that you heard that will hit them?
Okay.
So you're talking about extra dividend tax.
Yes, the dividends tax going from 15% to 20%. So that will obviously increase the amount of tax that's paid when a dividend is paid out of a company. And it does make sense in the sense that if we've got 45% for the normal individual's tax, and if we only had 28% inside a company and it was, say, a private company, then there would be no incentive really for a person to draw out. So there would be no incentive for the person to receive salary. They'd rather receive dividend.
Sure. Because
the effective rate there would be about 34. Now it's closer to about 42, 43. So the two rates are very, very similar.
And we've always worried about that, haven't we? That
yes.
People who have wealth can get wealthier and they're not earning an income, so they're not paying that income.
Yes.
So we're moving to parity, basically.
We are, because if you consider even listed shares, if the shares are held by the individual, then the dividends tax comes out at now 20%. 28% has already been paid. So as I say, it's between 40 and 45% anyway. So whether they receive a normal income or whether they receive a dividend, it's the same effective rate overall.
Finance Minister Pravin Gordhan says that the economy is showing signs of improving, but he does say that growth must be inclusive to make sure that it benefits everyone.
The Finance Minister says green shoots of economic growth are emerging, but nowhere near the rate needed to reduce the country's chronic unemployment and inequality. Economic growth is expected to recover to 1.3% as commodity prices rebound, the rand recovers, and the effects of the drought subside. Although we are spending more than we are collecting in revenue, the minister says the budget deficit of 3.1% is in line with projections. Still, borrowing to meet our needs has seen government debt rising to above 50%.
Interest payments are a rising share of expenditure, as I've just indicated, and by acting now to stabilize debt, we will ensure that future generations will not pay for today's expenses some 20 or 30 years hence.
Government debt currently stands at 2.2 trillion rands, but curbing this reliance can only be achieved through better revenues in a growing economy. This is how government plans to stimulate growth in some programs. 3.9 billion rand for small businesses and cooperatives, 4.2 billion rand for industrial infrastructure in economic zones, 1.9 billion for broadband implementation, and over a period of 3 years, 30 billion rand for agriculture and land reform. Ratings agencies have said that implementing growth-enhancing policies, stabilizing debt, and policy certainty will prevent South Africa from slipping into sub-investment grade. But is this budget good enough for the next round of reviews.
I think did sufficient to be able to avoid a ratings downgrade to the extent that the budget is one element in the overall compass of items that they will assess. So in that respect, I think he was convincing in the sense that he will attempt to stabilize the critical debt to GDP ratio, and his commitment to reducing the budget deficit remains unbridled. It will now be up to other forces in the economy to complement his initiatives so as to crystallize this budding growth takeoff.
The finance minister ended a press briefing earlier today saying there is money in the system, but only if it's used wisely. Devin Murrigan, SABC News, Parliament.